The stock market had a wild one. First, it went up specifically because of the computer algorithm's favorite headline, Trade Talk Optimism. Oh, that didn't last long as stock futures were down into the red when the Chinese side confirmed that they would only be speaking for one full day and would leave one day early. That doesn't sound very optimistic, but all we need is another tweet or random quote, unconfirmed source, to send the markets back up again. What a joke. You came here for the truth, so let me unveil that for you. You need to follow what's happening in the mainstream media in order to keep an eye on events that are going on between the US and China, but you never take them at face value. You always have to read between the lines. When you see what's going on at the Money GPS, at first glance, you may not understand, but if you've been watching for a while, you do get it. These are condensed videos that basically give you what you need to know, and I let you draw the conclusions. Let's get into the data right now, first talking about what happened between China and the US and how that affected the markets. Then I want to talk about the Federal Reserve. We have the meeting minutes from September's FOMC meeting that tells us some interesting information, and I wanted to bring it to you. Let's get into it right away. Here you can see the markets on the right hand side. The S&P actually broke 2,900. It has been struggling to surpass 3,000, always finding resistance around that level. The Dow Jones up 182 points. So you look at this and think to yourself, obviously something good happened today. Obviously there was positive news. There was progress. Where that progress was from, let's show you right now. Stocks rise for the first time in 3 days as traders hope for US-China trade progress. Well, isn't that interesting? The hope that there will be progress. Was there anything at all to suggest that there would actually be some sort of deal? Well, if you look a little bit closer, you find out what traders are now hoping for. No longer are they expecting that there will be a full-blown deal. Now, all they want is a partial deal. Something that they'll put on paper to suggest both sides are victorious, and yet nothing substantial will actually be agreed upon. This is what I have talked about for quite some time. The stock market needs something. It needs anything. I have actually suggested that these two sides should come to an agreement on at least the things that are probably already set in stone. We know that China wants to buy agriculture from the US. We know that there are some basic points that each side is probably already aware of, but they want to use it as leverage. And if China goes in with a deal that says we're going to buy US agriculture, they go ahead with that, and later on the US makes some demands that China isn't really interested in, well, they've already made the deal about the agriculture, so there would be a definite issue. This is where this struggle comes in. They are bumping heads every single time they meet, and there has ultimately been no progress. In fact, things are worse than they were a year ago. When we see the news, the information, the talking points that the media will provide you, it's giving you this. Every single time you're going to hear this. Hope, optimism, things are going great, fantastic. Well, the actual little bits of data that we have are, for example, how the Chinese side is going to leave one day early. I'll talk more about that in just a second. US and China make no progress on key trade issues in 2 days of deputy-level talks. The Chinese delegation refuses to talk about forced technology transfers, a core US grievance in the negotiations. High-level talks are expected to last for only 1 day, with this individual and his team now planning to leave Washington on Thursday. Now, this is according to sources, so I'm not going to take it at face value. I'm going to see on Thursday if they actually do leave. If they do, that's a fact. That's information that tells me, once again, they left early, negotiations ended early. We've seen this happen many, many times because they come to the table, they don't agree on something, and they leave. They're always trying to play hardball for obvious reasons. This is extremely problematic for these two sides because they know that this is so important. These two countries are intertwined in so many ways, and yet if they can't get this trade deal done, the economy in these two countries as well as globally will continue to weaken further and further and further. So after that report came out, Dow futures dropped 300 points after Chinese media reports that trade talks have made no progress. So immediately, stocks took a hit as a result. And this has been so ridiculous because the algorithms are picking up on this information as it happens. We get a headline that says trade talk optimism, the stocks will go up. We get some real data that shows things aren't looking good. Stocks may not even go down, but if they do, it's only a matter of time before another fake headline pushes it up. There's something very real going on right now, and that is the repo operations done by the Federal Reserve. I've talked a lot about open market operations previously on this channel in my book, and of course we see that this is intervention on a massive scale. They have really downplayed it. They have really made it seem as if this is nothing. This is just something we need to do right now. No big deal. It's not QE4. Nothing to panic about, nothing to worry about. We are not in a crisis. This is not a recession, and there is no need to worry whatsoever. We got your back. However, in reality, they've been expanding their balance sheet. They have been actively intervening in the markets, the first time they have had to do this since the financial crisis, and they have stated that they want their balance sheet to go higher and higher and higher, but only because of the reserves. This has nothing to do with the asset purchase programs that they have, just like the ECB and the BOJ and the BOE and the PBOC and every other letter in the alphabet. Well, you can see right here for yourself that billions and billions of dollars are needed to keep it afloat. Powell was non-committal on what the Fed's next move would be. Quote, looking ahead, policy is not on a preset course. The next FOMC meeting is several weeks away, and we will be carefully monitoring incoming information. He said that the actions that the Fed has already taken are providing support for the outlook. We will act as appropriate to support continued growth, a strong job market, and inflation moving back to our symmetric 2% objective. It sounds like he says the exact same thing every time, and in fact, he is. This just shows you that the Federal Reserve is simply going by whatever they believe is right. They are never going to look at you and your family and have that make a difference. Think about this for a second. We have the Federal Reserve giving trillions upon trillions of dollars out to people they never wanted to acknowledge. They never wanted to talk about the $16 trillion, and still today, technically, that never happened. There was a limited audit. They found out the information. Nobody got in trouble. Nobody even brought it up afterwards. Obviously, the Congress, I'm sure there was a few members, they were silenced and they were not allowed to speak about it after that point. This shows you the level of corruption that exists, and even the consideration that there should be an audit of the Federal Reserve after we found in the limited audit of $16 trillion, it's considered ludicrous. It tells you what they are really up to. The Federal Reserve and the central banks are far, far more powerful than any of the governments that pretend to control them. This right here is the balance sheet of the Federal Reserve. You can see that it should be updated tomorrow. I thought it would be today, but actually it should be tomorrow. This could move up as high as $4 trillion. Of course, I'll bring you the newest data as soon as it's available. Just showing you the fact that we've been told, oh, the repo situation is temporary. These are short-term loans, but you see the balance sheet expanding. And as far as I'm concerned, whether it's coming from the repos, whether it's coming from the back door, I really don't care. We've got this criminal enterprise, this cabal, this group of unelected individuals that are controlling what happens to your currency. You should be outraged. You should be upset. But guess what? You got too much going on in your life because you got a 9-to-5 job, because you got a family to support and to feed, and you've got daily events that keep you occupied from knowing the truth. I try my best to bring these videos out and hope to be just one small part of humanity understanding how dangerous this group of individuals really is. So these are the meeting minutes from the FOMC that took place in September. This is massive, obviously, but I wanted to show you a couple points that are within here. I think they're interesting to note. Participants agreed that developments in money markets over recent days implied that the committee should soon discuss an appropriate level of reserve balances sufficient to support efficient and effective implementation of monetary policy in the context of the ample reserves regime that the committee had chosen. This is basically saying that we need to expand our balance sheet to a level that they consider to be ample reserves, because essentially where they are today apparently is too low. So they will expand that and you'll see the balance sheet expanding, but it's not QE. Just wanted to stress that point. It's not QE, it's not QE, and wait a second, it's not QE. A few participants noted the possibility of resuming trend growth of the balance sheet to help stabilize the level of reserves in the banking system. Participants agreed that any committee decision regarding the trend pace of balance sheet expansion necessary to maintain a level of reserve balances appropriate to facilitate policy implementation should be clearly distinguished, this is the interesting part, from past large-scale asset purchase programs that were aimed at altering the size and composition of the Fed's asset holdings in order to provide monetary policy accommodation and ease overall financial conditions. Basically saying, last time around we printed a whole bunch of money, it was called QE. This time around we're not doing the same thing. This is completely different. Just want to make that clear. Several participants suggested that such a discussion could benefit from also considering the merits of introducing a standing repurchase agreement facility as part of the framework for implementing monetary policy. Basically suggesting, as far as I'm aware, that they would continue to do this for the foreseeable future, that they are going to set up a procedure that is constantly intervening. To me, that shows weakness. If we had already 2 cuts and we're going to see a 3rd cut coming along, then you have an introduction of a new policy, which is basically to interject money into the markets every single day. As far as I'm concerned, that's not strong. That's not strength. This is absolutely ludicrous, but here we are time and time again. 2 more things really quickly. QE infinity. Economists believe that Europe's bond buying could run for years. Now, this was back in September. Essentially, just wanted to make one point very clear. The ECB is going to start printing up 20 billion euros every single month. Well, they were doing it at 80 billion euro every single month, and it had no impact whatsoever. They're going to do it this time around with 20 billion euros, and it's somehow going to do what the 80 billion didn't. I think they've miscalculated it. Just wanted to point out the fact that we see this all the time. These central banks are lying to us every single day. The repo thing, it's not QE. Don't worry about it. We printed 80 billion last time. The 20 billion, that's going to fix it. What about when the ECB said that they were going to stop their asset purchase program? That was a joke. That was a lie, in fact. And people believe them over and over and over again. Why? Because they have so much riding on this ridiculous market. Last but not least, just wanted to touch on this quickly. Walmart Nation. Walmart is the largest private employer in 21 states. I get people talking about this all the time, how the jobs are plentiful Well, this is the number one employer, Walmart. Now, I'm not suggesting there's anything wrong with Walmart at all. If you want to work for them, by all means, please do. You got your family, you got your bills, understood. But in general, the wages are not very high in retail. Retail is really the biggest section of where people are working today. And if you think about it, you got increasing costs in so many different places, and yet retail wages are still extremely low. This is the problem being made worse by the central banks, and every single time they intervene in the markets, you should yell and you should scream and you should say, stop it, stop it, stop it. You are making everything worse. But people just don't know. They want their problems resolved for them, and this is only going to get worse time and time again. That's all for this video. If you found it informative, hit that thumbs up button. When you hit the like button, you are supporting me, so I do appreciate that very much. If you want to learn how to build a business online, how to actually produce passive income, I have a step-by-step e-course for everybody to check out. I give you all the details, and it's 100% free. Check it out at the AmazonGPS.com. If you want to know about the history, the foundation, how to actually make money, in these two books, I cover all of the topics surrounding financial education, and I hope that you will check them out. The link is in the description. If you want the audiobook, that's available at themoneygps.com. Whoa, don't go anywhere. Have you seen this video yet? If not, then definitely give it a watch. Click on it, and I will see you there.